All right. Good evening. My name is Amy Bach. I'm the executive director and one of the founders of United Policyholders. And we are so glad that you were able to be with us tonight, but so sorry about the circumstances that have led for us to be hosting this program in a series. We've been doing webinars like this for quite a few years now, as home insurance challenges have been in front of California property owners all over the state, not just homeowners, business owners, but we are here to go through basic information about the current marketplace, shopping for home insurance, and we will be answering pre-submitted questions, and we will also be answering questions that come in during the Q&A. But I want to ask a courtesy of all the attendees. We worked really hard to put together a slide deck that would cover the most common questions that we have been hearing. My team is fanned out all over the state, doing public events and coordinating with other partners, the Department of Insurance, public officials, all over the state. So we definitely know what's going on. We have our ear to the ground. We know there's a lot of stress out there. So all I ask is that you give us a chance to cover some of the material before you ask questions, because there's a pretty good chance that we are going to answer your questions as we go. That said, we do have a team that is ready to answer questions that come in to the Q&A. So please bear with us on that and give us a chance to get the information out there to you. So you can upload, download, I don't know if there's a difference, a copy of today's slide deck by going to that link, and that the recording of tonight's program will be posted on our website once we get it all uploaded and edited as needed. And so if you have friends, colleagues, coworkers who weren't able to tune in tonight, they will be able to watch it at another time at their convenience. So United Policyholders is a consumer advocacy nonprofit. 501c3 means we're a tax-exempt organization. We have a public purpose that has your back when insurance matters. We don't take money from insurance companies to keep an independent voice, and also so that whatever information we give you, you can know that it is in your interest, and that's our goal. That's our website. We have spent many, many years putting information onto that site to help you. We have all kinds of libraries and materials and resources on our website. And if you haven't been there, I encourage you just to go and check out what we offer. We offer trustworthy, plain language information and expertise on buying home insurance and navigating claims after a loss. We've been closely monitoring the California property insurance marketplace, coordinating with stakeholders to restore affordable options, and working hard to help people reduce risk and keep their properties adequately insured despite the current crisis. That's me. I've been a professional insurance consumer advocate since 1984 and an attorney since '89. I'm one of the founders, as I said, of this organization. Hopefully none of you have gone through a wildfire. I'm guessing some of you have. The people in areas that have been hit by wildfires are definitely on the non-renewal target list for many of the companies now. So if you did go through a fire, you may have seen our little yellow book, the Disaster Recovery Handbook. I'm one of the authors of that book. And I have been doing this work for long enough to where I sit on some fancy committees. I'm an official consumer rep to the National Association of Insurance Commissioners and to the U.S. Treasury. So I just want to remind everybody that what's happening here in California is happening in a lot of other areas. Florida has had it worse, believe it or not. But now we're right up there among the states that are being hardest hit. But many, many other states are getting plagued by non-renewals and higher prices and people getting dropped and a lot of frustration. We have an unprecedented situation. It's being fueled by technology tools, climate change, wildfire risk, inflation, severe convective storms, hail, more hail events. and insurers' frustration with rate regulation in California. That is part of what's happening here. It is only a part. There's a lot bigger things going on. In many zip codes around the state, name brand insurers have either stopped selling new policies or imposed strict limits on agents, such as you can only sell 5 new policies per month in this area. Non-renewals are a plague. That's why you're all here. Premiums have doubled and tripled, and the only option for you may be the California Fair Plan, with or without that supplemental product, a DIC, difference in condition. We'll talk about that later, or an insurance policy from a company that you've probably never heard of called a surplus lines company or non-admitted, lightly regulated company. The Fair Plan is a very important safety valve, but it is not anybody's ideal. It was not built to carry the weight it's carrying now. So there's a lot of delay problems, communication problems. But the real issue is that their policy only covers fire, no water, wind damage, or liability. So if you want to be fully protected, or at least protected as you were with a typical home insurance policy, you do need to pair it with another product. Lots of people are working on solving this problem, including our organization and the partners that are with us today, the volunteer agents, their associations, the Department of Insurance, your elected officials. It's an all hands on deck problem, and you can be assured that no one is ignoring it. We don't have the best solutions in place yet. We're working on them, but there's a lot of energy going into fixing this problem. The commissioner has a sustainable insurance strategy. There are legislative proposals from various elected officials, including the governor, that are pending. The sustainable insurance strategy is starting to roll out. And so for you, the bottom line is working with a good insurance agent or broker is more important today than ever before. So we have assembled a group of really good ones. And then a reminder that even though times are tough and prices are high and choices are few, insuring your dwelling for what it would actually cost to rebuild it in the event of a total loss is still very important. You know, United Policyholders has been around for 32 years. A lot of our time has been spent in areas where there's been a disaster. And I can tell you that very few people have, even before this crisis, had enough insurance on their dwelling. 2/3 of people found they didn't quite have enough. So while we know a lot of you are scrambling and making really hard choices, we want to recommend that you try to keep your dwelling properly insured, even if you have to sacrifice some other categories to make it affordable. So on today's expert panel, we've got a good geographic spread around the state. Forrest DeJong up in Santa Rosa. Forrest, did I say your name right?
I was close. DeYoung.
DeYoung. I'm so sorry. Forrest is with the Redwood Credit Union's insurance agency. We have Odalis Ordonez, a farmer's agent in Oakland. Thank you so much, Odalis, for being with us today. If any of you were on any of our previous webinars, Odalis took over Ruth Stroop's agency, and she had been one of our panelists in the past. And then we have Phil Irwin, one of the harder working gents that I know. Phil does double duty. He runs his own insurance agency out in El Dorado Hills, but he's also a special representative to the Fair Plan. Thank you for being with us, Phil.
Thank you for having me.
And then the folks that will be answering your questions that come into the Q&A include Emily Rogan, who is a United Policyholders Senior Program Officer. She's been with us for, I think, 15 years or so, maybe more. Joel Loucher, our program specialist, who spent most of his career at the California Department of Insurance, including a stint overseeing the Rate Regulation Bureau that is charged with reviewing insurance company rate filings. And then we have two of our very, very expert and very generous with their time volunteers, longtime volunteer, David Schaefer, an insurance agent out of Oakland, and Carl Sussman, an insurance agent out of Los Angeles. We also got some help answering some of the pre-submitted questions from some other folks that are more hands-on in the wildfire risk reduction space. And I just want to acknowledge them, David Shue, Ivan O'Neill, and Matt Everson. Okay, what are the current rules? Your insurer has to give you 75 days notice if they won't be offering you a new policy when your current one expires. Your insurer can drop you, but they have to tell you your risk score and offer an appeal process for improving that score. The California FAIR Plan, as I was saying a little minute or so ago, a lot of people say, is that an insurance company? It's not an insurance company. It's an involuntary, meaning insurance companies are forced to participate by law if they want to do business here. That is admitted insurance, certain kind. And they offer up to $3 million in residential coverage for fire risk. And they now have some discounts, which Phil will be telling you about down the road. Other insurers should be giving you a discount for hardening your home and creating defensible space. That's a work in progress. And as I said, also the California Insurance Commissioner's sustainable insurance strategy is in process. That's his approach to solving this situation. It focuses on updating the rate review and rate approval process, allowing insurers to use forward-looking predictive catastrophe models for setting rates, and pass along a portion of what they pay, what insurance companies pay for reinsurance, which is the high risk capacity they must buy. So it's reinsurance is insurance that insurance companies buy. And part of the strategy is to allow them to pass some of those costs along. But both of those things, giving the insurers the ability to use CAT models and pass along some of the reinsurance costs, come with a quid pro quo for consumers. And that's what we're going to be hearing more about. In order to get those things that insurance companies want, they must agree to write more, to insure more homes in areas that are currently finding no options other than the FAIR Plan. So this is a publication you can find on our website. Start shopping right away if you're dropped. Ask about your risk score. Work with an experienced proactive agent. Ask good questions. Keep good notes. And if you find that the FAIR Plan is your only option, aim for the add-on that I talked about. We're going to talk about it more. But then keep shopping even after your FAIR Plan policy is in place, because the market is much more dynamic than you would think from reading the headlines. There are shifts going on, new companies coming, companies opening up a little bit, somebody leaves, there's a policy available. So while we don't like people to try to play two agents against each other, because you don't want both two agents submitting an application for you to the same company. If an agent tells you that your only option is the FAIR Plan, we really encourage you to talk to at least one more agent in case they have some options that that first agent didn't have. And then, very important, you've got to be prepared to make risk reduction home improvements, which we know is easier said than done. So panelists, what is a risk score? How do you find out your risk score, and how do you change it? Why don't I start with Forrest? You want to take a crack at that? What is a risk score?
Sure. So it's it's a score that the carriers put together to kind of identify the likelihood of a claim and how severe that could be in your current property. So from a changing of the score, to be honest with you, I haven't seen too many of those. You do get some changes on occasion where the fire mapping or the protection classes, they'll call it, get readjusted. And so there'll be some adjustments on that. You can get a copy of what your fire score report is directly from your carrier. You can also get things that drive some of your fire score, like your CLUE report, which is your comprehensive loss report. You can get a copy of that from LexisNexis, and that's just a piece of what your overall risk score would be. And so I don't know, Phil, if you have something else you want to add.
No, I think you described it pretty well. Thank you.
And so Odalis or Phil, do all insurers use the same risk scoring system, or are there different ones?
Every insurance company has their own mapping to determine the risk score of determined properties. So the answer will be no. Every insurance has their own mapping system.
Okay. And then as far as being able to appeal, you have a new right. It just it just, you're right, just came into place, I think maybe a year ago, to request a detailed risk score, wildfire risk score. And then if you think it's unfair for some reason, you can appeal it. But I think the process of appealing is getting worked out with different insurers. So we'd say if you have a question or concern, you can go to the Department of Insurance. And that's their website and their toll-free hotline. Risk scores are a big deal. There's no two ways about it. Okay, so you already know this. Shopping in this market, unprecedented conditions, time consuming, challenging trade-offs and hard decisions. There are 4 main types of insurance companies admitted. That would be all the brands you know, Allstate, State Farm, CSAA, USAA, and then these non-admitted surplus excess type companies. In the past, those companies were not really in the home business. They were not in the business of insuring homes very often. Maybe high value homes or unusual homes, you know, geodesic dome, what have you. Now, they are filling in some of the gaps that the traditional insurers are leaving in the market. And for a lot of you, if your choice is going to be between the Fair Plan and a non-admitted one of these companies, then there's government created, that's the California Fair Plan, the California Earthquake Authority. And then there's a 4th type of forced or lender placed that your mortgage company can put in place if you let your insurance lapse. We highly recommend not going there. Forced place policies only cover the loan. They do not protect you. And they're very thin for what they cover, and they're very expensive, and they just make your debt go higher. So letting your insurance lapse if you have a mortgage is not a good move. These are the names. The good thing about an admitted company, they're not just their rates, but also their policy forms are regulated by the Department of Insurance. And if one of them goes belly up, runs out of money after a huge catastrophe, there is a backstop. There's a guarantee fund, and that is not available to a surplus excess non-admitted company. Those are alternatives to the known brands, and you know, I think now that we're in the here and now in California, with the situation we have, a non-admitted or a surplus lines product may be a better option for you than the Fair Plan. So, Forrest, do you want to talk about that, how that might happen?
Sure. Yeah, I mean, with the contraction of the market, you see there's a big gap between an admitted market and the Fair Plan. And so surplus lines traditionally have served more of the high net worth or the mass affluent market and the commercial line space. And so what they do is these companies are typically domiciled in other states and have authority in those states, and they just aren't filed in the state of California. And so there is some benefit to that, as it gives the choice and options and some flexibility in them being able to underwrite to the true risk, where the admitted market, they actually have a rate and file in place and cannot adjust their rate without the DOI approval. So the surplus lines have more flexibility in that. And I think, you know, when you start talking in this space, it's really important to be working with a broker that is familiar with that, because there's a number of agents that just don't play in that space very often, and you can get in trouble quickly. But when you have someone who knows what they're doing, it's safe, and there's a lot of positives that come out of that. You know, and if you look at from a market standpoint, these are not, most of them are not small companies. You look at companies like Lloyd's of London, which is the original insurance company of the world, Berkshire Hathaway, Nationwide, AIG, Berkeley. These are big companies that are very heavy in capital and have a lot of experience in the market. So it's one of those things that I think it serves a need. You just have to work with the right person and have the right education. To kind of clear up some of the myth too, is we have an obligation as an agent to go to the admitted markets first. And so at bare minimum, we need to submit to at least 3 markets to make sure that we did our due diligence. And so you have to sign what's called a diligence search form in order to even place a piece of business with the surplus lines market. And so The other piece that comes out of that is when you do place the business with a surplus lines, the client has to sign a form. It's called a D1 form, which is an acknowledgement, and it goes down and states many different aspects of what the policies can and can't cover. It can be a little intimidating, and so I think that's ever more important to work with someone who's familiar with that and can truly answer and walk you through that, because on the surface, some people might run for the hills, but there's a lot of really good products that are involved in surplus lines, in my opinion.
Okay, thank you. Odalis, is there any example that you've seen where a product that you can get through a surplus lines company is better for your client than what they could get, say, Fair Plan plus a DIC?
So we do our due diligence and we leave the California Fair Plan as our last resort. So if you get a quote for a non-admitted company and it is the right coverage for the right premium, our recommendation is to take that a non-admitted quote and get that policy, because this type of policies are more comprehensive than the California Fair Plan. With these non-admitted companies, you can obtain both fire, water, and liability coverage, all in one policy without the need of having two policies like the Fair Plan.
Yep, thank you. So this is the California Department of Insurance page from their website. And these are buttons you can push, and you can see like they have a list of carriers offering DIC policies. They have a home insurance finder. Not all of these sections are always completely up to date, but it's very helpful. And it's a free resource. So some people, of course, worry, wow, these non-admitted companies are not covered by the guarantee fund. So if they were to go belly up, I'd be really up a creek without a paddle. As you've heard, working with a good agent, you wouldn't want to just go straight to one of these companies. You'd want to work through a professional who knows the company, ideally. But these are some other options. So for checking on the financial strength of an insurer you've never heard of. AM Best has a website, and you can click on that and you can put the name of a company you're researching, and it'll tell you some information about their rating and their strength. And then the department has a list of approved surplus lines insurers that you can check out. Again, just researching. So let's get to the Fair Plan. Phil Irwin, as I said earlier, does double duty. He also has his own agency, but I don't know, Phil, how you got this job as being the liaison for the Fair Plan, but God bless you for that. Tell us a little bit about what we're looking at on this slide.
The Fair Plan, is intended to provide, as the insurer of last resort, to provide basic coverage. So it's so basically the policy, the perils, it's what's called a named peril policy, and it covers fire, lightning, internal explosion, and smoke damage. And using the Fair Plan in conjunction, the idea is with the difference in conditions policy, which primarily covers water damage, theft, and liability. Using those two policies together would give you the primary components in a comprehensive homeowners policy.
Okay. So a DIC, some people call it a wraparound. Let's talk about what's covered, what's excluded. And our suggestion to you as the consumer, when you're shopping for a DIC, you want to know, just like you'd want to know with any insurance policy, what does it cover? What doesn't it cover? Does it pay for my loss on a replacement cost or an actual cash value that's depreciated, meaning not what it would cost to fix it or replace it versus replacement cost? Go over some scenarios. And then one of the benefits of a DIC, if it's with the same company that you have your car insured with is that you can get a bundling discount. Phil, what kind of guidance do you give your clients on buying a DIC?
Well, I think the DIC is just still part of the whole package. And even as to the points Forrest was just making about a non-admitted option, I think when it's coming time when you're being non-renewed, or it's a time where you're really considering every available option, I really encourage getting everything out on the table. Talk to multiple people and different brokers and hear different schools of thought, because there's a multitude of difference in conditions policies out there. And that way you can really, when you're making your final decisions, you're considering a non-admitted option if it's available. You're considering different DIC policies in conjunction with the FAIR plan that are available, different endorsements that may or may not be important to you. So it's really important to, really depending on what your specific needs are, which policy is going to fit the best for you. And, just know that there's definitely choices out there. And you want to make sure you make the effort to explore those and get started as early as you can in the process.
Thank you. Odalis or Forrest, anything to add when you're working with a client who's looking at a DIC?
Yeah, I mean, I think Phil covered it well, but ultimately it's just understanding what the coverages are, because there can be some differences available by the different carriers that offer them, and there can be different coverage limits, right? Some of the wraps can go up to a higher level limit than the standard DIC. So it's just getting an understanding of what's included in that, because they're not all created the same.
Yeah, how our colleagues had mentioned it, it is important to explore the available options and also inquire about bundling discounts. Because if the company that you are getting that DIC from also offers auto insurance, why will not you take advantage of that bundling discount and also make your agent your one-stop shop for all your insurance?
So can you folks give me just sort of a price range of what people are paying for DICs? Is that too hard a question? I'm sure it varies, but just generally, are we talking like a third the price of a normal policy? Are we talking 1,000, 2,000, 800? Where are they generally fall?
There's a range. I've seen them anywhere from $400 or $500 up to several $1,000s. So it just depends on the risk and the need.
Okay, and then for those of you who are following this drama in the media, there's been an incredible amount of coverage of the insurance crisis here in California. You'll know that last week there was a big kerfluffle. Some media outlets reported that State Farm was reversing course and that they were not going to be dropping people. And the real scoop is State Farm never said they were leaving the state. What they said last Memorial Day, a year ago and change, that they weren't going to write any new policies. And then a few months ago, they announced that they were going to drop 30,000 more homeowners, or not more, 30,000 homeowners. And then I think 40,000 commercial. So, or condos, I'm probably getting that wrong. Anyway, what matters is then last week, they announced that they're going to offer some of their clients, instead of just non-renewing them cold, they're going to offer them a DIC. The media didn't quite report it that way. Some of the media outlets made it sound like they were offering a full home policy again. But my understanding is they just are now selling a DIC, which Farmers has been doing for quite a while. What are some of the other name brand insurers that are offering DICs? Phil, do you want to hit that?
Sure. Well, lots of companies have them, so Travelers as one, Safeco, Nationwide, Mercury. There's other companies, Cabrillo Coastal, which is written through Pacific Coastal. Aegis is another big one. Heritage is one we use, KW Specialty. And it really just comes down to, what you're insuring, if it's how it's being occupied, you're really ultimately what your needs are and in what's important to you. And that's, there's no cookie cutter. It really just it depends on what's important to you individually and what works for you. There's lots of options out there.
Okay. Let's talk about speaking of options, what you can get through the FAIR plan. Now, back in the day, agents like probably Odalis, Forrest, Carl, David, would not have been putting you with the FAIR plan. And so they really didn't know much about the FAIR plan. So a lot of agents have had to really bone up and get up to speed. And there's probably still some agents out there that aren't as familiar as they should be with the options. So we're here to make sure that you know what they are. These are options you can buy when you're going into the FAIR plan. Extended coverage for windstorm or hail, vandalism, extended dwelling coverage, replacement cost coverage on your dwelling and contents, an optional increase of your fair rental value, code upgrade coverage. That's a very valuable coverage that, especially for people with older homes, that will cover the cost of bringing your home up to current building codes if it's been damaged and needs to be repaired. And then there's two other options. Phil, is there anything you want to say about these options beyond what's on the slide?
No, I think you mentioned it pretty well, but again, I think it's, the FAIR plan is completely customizable. FAIR plan policies are completely customizable, and there's no cookie cutter. So it's really important to take the time to understand it. And I would just say one thing that's just been really remarkable, because I've been in the business over 30 years, and really in the last 6 years that I've really seen this surge of, I guess, change in our marketplace, especially in the wildland urban interface. The consumers are more educated than I've ever seen. It's really been a pretty spectacular process, and obviously credit to Amy and your organization and lots of others, just educating and the CDI as well, just out making the effort to get out there and educate the consumers, because when we're having these discussions, the level of, we used to say it's, keep jargon and, insurance terminology out of the conversations with consumers. But again, the level of knowledge that's there today is really impressive. So I think the more you know, the more you understand, the more you attend meetings like this, the better off you'll be for sure.
Yeah, I as one of our messages to people, I'm sorry, you're going to have to spend more time thinking about insurance than you ever did. And that's just how it is. But luckily there's some resources available. So there are some, not every, look, I don't like to sugarcoat things. That's just not our way. We try to give people the straight scoop. There were a lot of problems in the fall with when the FAIR plan switched over to a different technological platform. There were incredible delays with just even being able to reach somebody and let alone even get a policy issued. But a lot of that has been cleared up, I believe. And so there are. So is there anybody want to? Are there still problems for your clients in actually getting a quote issued by the FAIR plan? Odalis, Forrest, either of you? I know, Phil, you don't have those problems.
No, I think for the most part, we're getting quotes. It's when you get into the coverage A limits over $1.5 million, there's additional underwriting, right? And so it's just that sometimes it takes a little longer, and it's just setting the expectation and getting the right documentation up front. So I think overall, a lot of those issues have been cleaned up. The challenges are inundated. Just like any of the admitted markets that are currently open, they're inundated as well. And so things are taking longer than normal. So we're encouraging everybody to start the process early. Most of your quotes are good for a 30-day period or so, but I encourage everyone to start having the discussion and gathering documentation 60 to 90 days out. So you're not caught at the last minute and trying to do a scramble.
So as soon as you get that non-renewal notice, you hit the phone.
Right.
Odalis, similar experience in terms of the processing time. I think you were the one who said you were calling on Saturdays because
So we set up the expectations. We present a preliminary quote to clients, and we gave them a turnaround time between like a week or up to 3 weeks, depending on the coverage that we're looking for. And the California Fire Plan requires pictures that are at least 1 week old. Then when we're submitting the application, so once the client decides to move forward, we send the list of pictures that we need. And we let them know that it's going to be a little bit of wait, a week if you're lucky, but you can get it back in 2 weeks.
Okay, and we will have a slide later in the deck where we talk about that the FAIR Plan is requiring, and I want to ask you, Phil, is this a hard and fast rule that any application for a property that is valued at 1.5 million or above, you must give them a replacement cost estimate in order to get the policy? Is that a hard and fast rule, Phil?
Yeah, it's not the value of the property, it's the value, total insurance value. So whatever you're applying for, once you hit that threshold of 1.5 million, and again, obviously it's a good, rule of thumb or best practice to have a replacement cost estimator anyway, so it shouldn't be an extra task. It's just, it definitely needs to be submitted with the photos as a requirement.
Okay, so Phil, can you just walk us through this slide? I think an issue came up when we were prepping for the program tonight. One of our agent volunteers, David Schaefer, alerted us that there is a difference in the quality of the coverage you can buy if your roof is over 25 years old. So can you explain that, Phil?
Well, as far as getting replacement costs for claim settlement, obviously that's what the big, I would say the big question is. And at the end of the day, even a 25-year-old roof sometimes can look like it's, or a roof that's 10 years old can look like it's well older than that. So the condition of the roof sometimes would come into play too. But the requirement for a roof to be less than 25 years old helps ensure that the roof is in good condition. Age of roof generally correlates to the condition, and making a subjective determination on roof condition during the underwriting process, really isn't possible. So therefore, the age of the roof as a standard is more applicable to the process for underwriting the risk. So really, it comes down to that and that's really where I think it comes up the most, because people want to have replacement costs. That's definitely the way they want to have their coverage and their claim settlement options. So again, that's probably why it comes up more frequently. But again, and we're always available to help if there are specific questions. And again, one of my roles is I've got an open calendar. I'm available to help brokers navigate guidelines and processes too, if there is anything that they're having questions on.
That's appreciated. So on the inflation guard, I thought all policies automatically included an inflation guard feature. Is that different for the FAIR Plan?
Well, if you're again, it's optional, but if you want to have a replacement cost, you definitely need to have that on there. And unless you're at a threshold that doesn't allow it, so I think it's 8%. The inflation guard increase each year, and again, if you're at the 3 million of the TIV limit and you're precludes you from advancing that level, then obviously it wouldn't apply to you. You'd still have it on there, but they wouldn't be able to increase it to that level, so you'd still be eligible for replacement cost.
Okay, so we're going deep in the weeds here, maybe too deep, but on the ordinance or law piece, United Policyholders has actually worked very hard to get laws in place in wildfire-prone areas that say that insurers have to offer ordinance or law coverage because so many people come up short on the money they need to repair or replace and bring their place up to code. So we're good with that piece. Is there anything on here, Forrest or Dallas, that is tripping you up in serving your customers, or that you feel like people need to understand better with the FAIR Plan options?
No, I wouldn't say tripping us up. I think it's just a communication piece on, it's the days of getting a quote bound in the same day are almost impossible. So just setting that timeline of what this really looks like has been the biggest challenge, I think, but it's communication.
Yeah. Dallas, anything you want to add, or have we covered it?
I think you guys have covered pretty good. Thank you.
Okay. So now we have a little bit of good news. The Department of Insurance has mandated in a regulation that insurance companies adjust their rating plans to reward people who have reduced risk, but that process is slower than we would like. Some insurance companies are already offering discounts. And one of the first discounts that were approved officially are these fair plan discounts. So Phil, can you go through those, please?
Yeah, there's basically two pieces or three, I guess, three core discounts with lots of elements. So it's really good to see, and we've been able to see, most people be able to find a way to take advantage of at least one of the options. But the first element is the biggest one. It's I guess the home hardening discount, and again, that's more focused on fire safety expectations for your home, and meeting all of those elements, and then the next piece is going to be more around defensible space. So again, your immediate surrounding, and again, some of the aspects with the home hardening is cost prohibitive for some people, depending on when your home is built. To meet all of the requirements may not be viable for you. But again, the defensible space, which actually coincides with, especially for folks in the wildland urban interface, coincides with how fire's expectations, that's going to give you the 5% discount for having a defensible space. And the other great one, and these all stacked together, is the FireWise community discount, which is 10% off of the wildfire portion of your premium. So again, that's a community-based discount. So by getting your community certified, usually it starts with the fire safe councils or the different organizations, fire alliances out there. You can initiate the process for your community to qualify for the FireWise discount, which again is a 10% discount. So that's really good opportunity to save some money off the fair plan premium.
So we know, because we had a FireWise representative speak to one of the working groups that United Policyholders has been running to try to help alleviate the situation here. It's actually not that hard to get certified as a FireWise community. It's nothing nearly as hard as getting your community to be dubbed participating for the flood insurance program. So really, if your area isn't a FireWise community, if you can participate in getting that designation, it's going to really benefit the people around you and you. I said I don't sugarcoat things. So I do worry that it's easier said than done to get these discounts. Dallas, Forrest, have either of you been able to actually get a fair plan discount for any of your clients so far?
We have been able to get a FireWise community discount for a couple of our clients. For the other two, it is kind of complicated here in the Bay Area because they don't want to see any green on the house. So we haven't been lucky on those two, but definitely the FireWise community discount, it's good, it's helpful.
Okay. And again, I see the questions piling up in the Q&A. So I really would ask that if folks could just please keep listening to our experts. We very well may answer your question, but I can assure you that if we don't get through all the questions that come into the chat tonight, we will be doing another program. You'll see when we get towards the end, we got a number of questions that came in that were not exactly about insurance, shopping for insurance. They were more about things that insurers are asking people to do, or construction techniques. And so we have a whole nother set of experts that can help answer those questions. So we will be doing a follow-up program. And I appreciate all the attention, but I also appreciate the questions. I just want to note that I see that number climbing in the Q&A. So Forrest, how about you? Have you had any success with getting the fair plan discounts for any of your clients?
Yeah, we've seen some, and if you look at, our geographic region for Redwood Credit Union is 8 counties for the most part. We do service all over the place, but that's our primary concentration. And with that, Marin County has the biggest penetration for Firewise communities. And so we have kind of a smattering around the rest of the territory. So we have seen some for sure, but
Okay.
I wouldn't say it's prevalent.
Okay. Now, USAA had been offering a 5% discount for being in a Firewise community for many, many years before anyone made them. Some of their competitors have some, before the department's regulations went into effect, they already had some discounts. And, our feeling at United Policyholders is that eventually insurance companies will be competing to say, I offer the better discount. We're not quite there yet, but that's part of our goal, is to get there. So these are the main steps for getting the protecting your structure discount. Class A roof, vents have to be ember and fire resistant. You have to have 6 inches at the bottom of your exterior walls made of non-combustible material. You've got to box your eaves, and your windows should be double paned. For getting the other discount, protecting the immediate surroundings, this is with the FAIR plan. This is also similar to the wildfire prepared home and the Safer from Wildfires programs as well. No vegetation or debris under the deck, ember resistant zone 5 feet around, nothing at all. Green, as Odella said. No, I want to make a joke about how some of my plants are brown, but okay. From me not taking good care of them. No combustible sheds or outbuildings within 30 feet of the dwelling. Defensible space has to be maintained. No branches touching the house, clear brush, etc. Phil, now we're going to get to some of the questions that came in before the program. Why is the FAIR plan requiring homes with a perfectly good and well-maintained roof to be dumped, which creates environmental waste, and replaced before they will issue the policy?
Again, I think that's a pretty tough question to answer, in the sense that, it really just depends. Everything is a case by case situation. And again, if the roof doesn't meet the requirements, they're not going to be precluded from coverage. It's just going to modify the coverage from replacement cost to actual cash value.
So, and then is it worth going back to your agent and saying, can you advocate for me with the FAIR plan, and show them that my roof is actually in good shape?
Well, for one, again, you're not going to be precluded from coverage. So I think that's important to understand. And absolutely, there's opportunity to advocate for your clients, because a lot of times there even may be an error in the submissions. That's really initially what the underwriters are looking at. And that's why they also order inspections, to really go out and get a hard look at what's involved.
Okay, thank you. How long is a FAIR plan quote good for in California? 30 days or 60 days?
Well, the quote, when you get a quotation, it is good for 30 days, but you're able to just turn around and generate a new one if you need that period extended.
Okay, so 30 days, basically.
Yep.
Okay. So these are just ways agents and brokers can help you find options you can't find on your own, explaining your FAIR plan and DIC options, and then advising you on essential and non-essential coverage, endorsements, and deductibles. Of course, and agent qualifications, people ask me all the time, how do I find a good agent? I always say, start with word of mouth. If you have friends, colleagues, neighbors, coworkers, who you can ask them, do you have a good agent? Then the Department of Insurance has an agent broker locator feature on their website that just lists every licensed agent or broker in the state. You want to look for integrity. Most important is that they be current on what's happening in today's market. If somebody if you start talking to an agent and they say, oh, everything's fine, I'm going to get you all set, that's not really, most agents are going to be honest. This is a really tough market. And I think that level of honesty is important because you do want integrity in an agent. And then fourth, you really want them to be knowledgeable about the FAIR plan. These are some of the things you may be asked to do, and then I'm going to ask my panelists if they have encountered other things. Some insurers are requiring people to provide proof of installation of a leak detection or automatic shutoff valve on their water line, or install a monitored fire and burglar alarm. That's generally for homes over $1 million. You may be asked to limb trees, remove trees. That's one of the most painful ones. Have clear space around the home, remove a trampoline. What are some of the other requirements, Forrest or Odalis, that you are seeing carriers impose on your clients in order for them to write to insure the home?
I would say the biggest one I see on a consistent basis are the roofs, right? You get older roofs that have some moss buildup or algae. And so people can go in and you can, in a lot of cases, clean that off and pass inspection. Some cases you cannot. And so it's important to be diligent about that and upfront. And so if you have those, clear them off, because almost every time it's coming up on an inspection report and then it holds up underwriting.
Odalis, other things you've seen your clients be asked to do?
Yeah, and just maintain that ownership or level of ownership on the property, of keep that avoid peeling painting, or how Forrest mentioned it, that moss in the roof is also it's called out a lot of times after inspection.
So, we also have been getting a lot of input from consumers that people say, oh, they won't insure me because I have knob and tube wiring, or they won't insure me because I have galvanized, not copper pipes. Is it, are you finding, agent volunteers, that you're able to help the homeowner if they can cure the problem, that they then will be able to get the offer of a policy? Or would you say that once the insurance company has said this is a problem, that there's no point in arguing, they're just not going to take the property?
So
Forrest,
one thing that
go
sorry.
ahead, Odalis, go ahead.
One thing that I feel it's important to let the consumers know is that at the time of that you're calling to obtain a quote, it is important for you to disclose the type of electricity that you have on your house, disclose if you have any knob and tube, and also the type of plumbing system. There's a couple of companies that will take the knob and tube, they will just require an electrician inspection, but they will be able to offer insurance. There are other companies that will be willing to write you a homeowner's policy, but any claim arising from the knob and tube might not be covered by the insurance policy. So that's why it is important for clients to disclose if they have any knob and tube in the house. If you have older plumbing on your house, you can also obtain insurance. Some companies might require you to have a higher deductible for water damage, but you can definitely get insurance if that's your case.
Forrest, anything to add?
Yeah, I would say you certainly should advocate. I mean, we've had a number of cases on renewal policies that things come up, and the member or the client's been able to remedy that. And we show either with documentation of the invoice and photos. Permits are required sometimes, but certainly that's happening. I wouldn't say on every single one, but we've had a number of them overturned on renewals and on new business quotes.
So that's good to know. And I think I need to take a moment here to acknowledge that there is a tremendous amount of frustration out there, and we know it and we hear it, of people who say, my insurance company is asking me to do things that don't make any sense. Like they're making me take out mature trees, they're bringing shade, and how can that be legal? And it shouldn't be legal for an insurance company to make you do things that don't relate to risk. But to them, because of all the technology that they now access, all these things relate to risk, right? So we're learning the hard way that not all technology is helpful, certainly to consumers, right? We are in a situation that I think a lot of us did not see coming, meaning that insurance companies have been insuring properties for as long as we can remember that have all kinds of flaws, knob and tube, roof that needs repaired. That has been the way for such a long time. But now, because of those factors that I mentioned earlier, it's not just that they can see you more in a more granular way, not the data they now have, the aerial images they have, the clue reports, all of that, the predictive models that they're getting that are telling them, oh, you shouldn't insure this type of home or that. So we do have a situation where things have gotten a little beyond existing regulations. But we really have to get the market calmed down again before we can put any new rules in place, because a lot of the insurers are just, they're already saying that we don't feel that comfortable with the rules in California with our rates. And so we got to get them calmed down and back in. And then we can look at, okay, let's maybe curtail some of these requirements that they're imposing that are so hard. But for now, where we are now is do what you can, and work with a good agent to be your advocate with the insurance company, and help them see the things that you are doing that make your home a better risk. That's probably one of the most important things you can do, is that. These, as we were just saying, these are some of the issues that are tripping people up on their applications. Your claim history, and this one rankles me. We tried to get a law through many, many years ago, to limit the way that insurers can use your claims against you. We couldn't do it. So it's still, they are within their rights to do most of the time what they're doing here, at least under current law. The age of the home, age of the roof, all those things. Monthly quotas. I know that was sort of new to me, that some agencies now have quotas. Forrest, are a lot of your carriers imposing quotas?
You mean limitations or?
I'm sorry, you can only give us so many new applications per month, or is that fairly common now?
Well, I would say there's a few that do that. Most have either retracted from the market entirely, and then there's a few that do that, and the rest are open to a degree with more strict underwriting in place. I don't know of too many that have quota imposed on the independent channel. There are certainly a couple.
How about you, Odalis?
I do work with two companies that have limit capacity in certain areas. And one of the primary companies, they do have a limit for the whole state, monthly limit. But yeah, there's a couple of them that have limit capacity to avoid density, most
Right.
likely.
Right. Phil, the FAIR Plan can't do that, right? How about some of
Correct.
right? They can't, they have to say yes, right? I mean, there's
No,
obviously,
correct.
there are certainly conditions that the FAIR Plan is imposing to issue a policy.
Very few. That would be very few reasons why you wouldn't qualify for a FAIR Plan policy.
Okay. So we'll take that in the good news column. All right, let's talk about installment payments. May not be an option for a new policy. May be an option for renewals once you've established the policy. Odalis, Forrest, with non-admitted carriers, insurers, are any of them allowing installment payments, or is it pretty much straightforward? You got to pay in full upfront.
Most of them are full pay. We do have, since we are affiliated with Redwood Credit Union, we offer premium finance in the form of a personal loan, but we have third-party vendors that do premium finance as well. So there's solutions for that.
To help you if you can't afford the premium, right?
Correct.
Okay. Odalis?
Awesome. We do work with a couple of companies that have payment plans available. This payment plans we like to go in details with clients because sometimes they will include additional fees for having payment plans. So we like to discuss the pros and cons of paying in full or paying bi-monthly or on a different payment plan.
Okay. All right, affordability strategies. Find out what discounts are available. Ask for those you qualify for. Bundle your home auto umbrella with one insurer if possible. Work with a proactive insurance agent or broker. Raise your deductible. While shopping, ask for a quote with different levels of deductibles and compare them. Most consumer advocates carry at least a $5,000 deductible because we have learned over time that that filing small claims is really not worth it financially, and you're better off having that higher deductible. I know that is not viable for some households, but that is a tried and true piece of advice. A higher deductible will reduce your premium and you'll be less likely to file those small claims. Another strategy, reduce or eliminate buckets of coverage you can live without, such as high dollar limits on your contents, or if you can, cut other structures coverage. Some insurers won't let you break that out. If you don't have garages or outbuildings, then you don't want to pay for that coverage. If you live near family and friends and money is really, really tight, you can consider reducing your temporary rent, your additional living expense coverage. We will never recommend that as a consumer group, just because we've done so much work in wildfire areas and people always need that temporary rent coverage. But if you do have a family nearby that has accommodations and you're really in a spot, that is one other category you might be able to reduce. Harden your home, mitigate, create defensible space, and give your insurer proof of those things. Same goes for upgrading your wiring and your plumbing. Give the insurer that proof. And as I said, don't file small claims. Do what you can to improve your risk profile by installing a moisture sensor, an alarm system. Anything, agent panelists, that you have in your back pocket for bringing the premium down that's not on this list? Anything?
I would just add, it kind of goes back to the DIC options and really considering the pros and cons, because there are some carriers that with the DIC policy requires that the FAIR plan be, or that the personal property coverage, as an example, be 50%, or even there is some policies that require that it be 75% of the dwelling amount. And for a lot of first-time home buyers or a lot of folks that maybe they don't need that much coverage C or personal property coverage, so maybe they want to go to a DIC policy that will let them, that won't care as much, won't make a match, or will let them go down to 25% of the coverage C amount, which is personal property, which again, that's an expensive component, personal property, for both the FAIR plan and for the difference in conditions policy. So again, if it's not suited for you, if it's not necessary, that's an area where you could potentially save money on your premium.
Yep. Anything else before we go to the next slide? Any other strategies? Okay. Bundling discounts. So CFP, that stands for California Fair Plan, plus a DIC, no discount for bundling, right? There's no scenario under which you could get a bundling discount there, right? Your Fair Plan
No.
plus anything, no. Fair Plan policy plus a DIC, and then an auto policy with the same company that you have the DIC with, that gets you a discount. So anything any panelist wants to explain about bundling discounts? Nobody? What are the range of bundling discounts, if you can say?
So I just want to reaffirm that the bundle discount really makes a difference. You can be saving up to 25% in your home insurance if you can bundle it together. And besides those discounts, you also have the advantage of having a one-stop shop. So you don't have, if anything happens, you only deal with one agent.
Right.
rather than just having one agent for your auto, one agent for your home. You'll have one agent dedicated to work on your personal insurance.
Yeah, I mean, I think, like, we did, by the way, invite a State Farm agent. I don't think State Farm will allow their agents to be on a program like this. So we got to give kudos to the companies that you guys sell for. But one of the reasons that they did unveil that discount, I mean, the difference in conditions policy is they want to hold on to their auto customers. So I mean, Forrest, anything else to add on bundling discounts?
No, I mean, on occasion, if you have an umbrella policy as well, they can be included. So it's just additional lines, you know, the carriers look at it from a penetration standpoint and they reward for that.
Okay. All right. As I said earlier, mitigation discounts and renewal assurances are a work in progress. There's legislation pending that would require an insurance company to offer you a policy if you have mitigated up to the standards that I'm going to go through in a minute. But it is stalled right now because of what I said earlier. We need to get insurers back in the market, and then it might be easier to put new mandates in place. Some insurers are voluntarily offering mitigation discounts. And as I mentioned, there are regulations in place that require that. One of the challenges, I think, for everybody who has done mitigation on their own home, is that that's great, but to get the really the full discount, you really need your community to be engaged. And that's where insurers are saying, hey, you know, what you do to your house is good and important, but it really could still burn if your neighbor hasn't done anything. So it's tough, and United Policyholders is working very hard to advance risk reduction in communities. We have a RAP resource center, and I'm going to talk about that in a minute. There's a lot of energy, time, and money going into reducing wildfire risk in California. We've got our working group, which has been at it now for 4 years, sharing information in the different communities throughout California of strategies for getting grant funding for people who can't afford to pay for risk reduction. You've got the Firewise program, you've got the IBHS program, you have the department's wildfire Safer from Wildfires program. This is our RAP resource center. We don't have all the counties yet. Hopefully we're going to get a little more funding and be able to complete it. But we've got a lot of the most at-risk counties in the state. You can click on the map in your community and find out what steps you need to take, who can help you in that area, and what grants might be available to help you pay for the work. So when we talk about creating defensible space and hardening your home, these are the things that we're talking about, the things that I showed you earlier. The roof, keeping embers out, replacing wooden fences that are touching your home with metal, and all those things.
Can I just add, Amy?
Sure, go ahead, Phil.
You know, I think we direct folks to these resources all the time because I think more often than not we get conversations. People want to know what's going to make a difference for my home. Not only is it for insurance purposes, but what's going to make me more safe. And there are a lot of things that I wouldn't say are gimmicks, but are expensive that aren't really going to be impactful. So you really want to do your research. If you are willing to invest in improving your home or harden your home, make your home more fire safe, you know, you really want to look at these experts or these resources when you're making those decisions where you're going to have the most impact for sure.
Yeah. So there are, you know, when United Policyholders started our working group, and we said, okay, insurance companies are saying that they're pulling out because risk is higher than they realize, and now that they see it, they don't feel safe with investing, and they're worried that they won't be able to meet their obligations if we have, you know, more big wildfires. So when we first started this endeavor and we said, okay, let's see what we can do to reduce risk, there were no official standards for the things that you could do to make it less likely that your home would burn, right? So that's in the past. Now we have official standards, and not just one, we have two. They're very similar. And these are what they are. So you've got Safer from Wildfires, which is what the California Department of Insurance and CAL FIRE came up with. And then you have IBHS, which is a national scientific research entity funded by insurance companies. Their lists are very similar. And what the Department of Insurance did as to try to help you, the homeowner, is give you as much flexibility as they could, and said you don't have to comply with you don't have to get the IBHS certification. You could do all those things on the other side of the list, and the insurer should still give you a break, right? But the reality is that insurance companies feel the most comfortable with the IBHS standard, and that is sort of they've been trying to set that as the standard because they have now this program, Wildfire Prepared Home. And it's got 2 levels. It's got the basic, and then it's got Wildfire Prepared Home Plus. And you can, these are all the things that they need you to do in order to get that certification. We are working really hard to help people get that certification. It's tricky. Can I ask my agents, have any of your clients been able to get the IBHS Wildfire Prepared Home designation? Anybody? Yeah. So I believe since they rolled it out, there's only about 250 homes in California, maybe by this time it's 300, that have been able to get that designation. Forrest, do you mind saying what the sticking point is for folks?
Yeah, it's expensive on a lot of these things. And so it's, you know, we have this conversations with people when you start having to remove trees and get your clearance in the different zones and everything. It's I always tell people it's a personal preference, and you need to determine what makes sense for your individual situation. Because if you're going to have to damage tens of thousands of dollars of landscaping and make all these updates, does it make sense to try and weather the storm and find a different product until the market shifts? And nobody really knows when that's going to happen. But it's a personal preference on what people want or what they're trying to accomplish. And it's a very difficult one. There's some where you can do it for not a lot. And I've seen some that are $40,000-$50,000, you know, worth of repairs that are needed.
Yep. Well, so, you know, the states that have gone a lot farther than we have with their programs, that those are the hurricane prone states. They have fortified home programs on all the coastal states. It's a lot easier and cheaper to do those. You know, roof tie down or even a new roof is still not as costly as all these things. Flood mitigation is right up there in cost. And these are some of the challenges of our era. This is the process for getting the designation. And listen, we are grateful for the work that has gone into that program. And we hope that we find a middle ground here. What options do I have when my insurance company begins to require over-the-top improvements? This is the one I mentioned earlier, like such as removing mature trees and repainting things that were just done. I think we already kind of answered this, that you can try to work with your agent to advocate for you, to explain why these the things they're asking you to do are not reasonable. I do encourage people to file a complaint with the Department of Insurance. If your insurance company is imposing a requirement on you that feels irrational, like it's not really tied to something that's related to risk, then that's definitely something you want the insurance department to know about, and that may be something that they can intercede to help you with. Anything, panelists, that you want to add on what options do you have if the insurer is asking you to do things that you feel like are not reasonable?
Well, some of the options, if you're with an admitted carrier, you can look at surplus lines and you can look at the FAIR plan. So there are other options out there, and you have to weigh that out. What is the best decision for that particular person and property?
Do you find that the non-admitted companies are less stringent with their requirements?
To a degree, but not always.
Yeah. Okay, I'm sorry. I didn't let anybody else speak to that. Phil or Odalis, anything you want to add here?
You know, I encourage people to look at some of the Rebuild Paradise efforts and some of the fires we've learned from, you know, that have been devastating, but we've also learned from them, and really from your own perspective, look at what makes sense, because a lot of what we're hearing about in some of these reputable organizations, that things are asking or recommending or setting as standards are for a reason, because those are the houses that didn't burn or didn't have the impact, or, you know, they're really meaningful changes. So again, I think that's what you have to look at. What makes sense? What makes sense to you? What makes you feel safe? And that's just kind of educate yourself. There's lots of resources, but also look at some of the big areas that had major fires and were impacted, and what really made a difference for the homes that took these steps versus the ones that didn't.
Yeah, I mean, I will admit, when we had an IBHS representative speak to us, and we've had fire chiefs speak to our working group, and I would say, you know, can't people be rewarded for just doing a few of the things? And, you know, the official line from fire scientists and firefighting experts is, it's a system, and there's a reason why we have all these things on the list. And so, no. So, you know, we fought really hard to say, like, 5 feet of clear space. I mean, if there's one thing people feel passionate about, it's, you know, their plants that they have been nurturing. So that's a tough one. But unfortunately, the science shows that those are the things that allow firefighters to save homes. So they're going to stand on that list, you know, as scientists. So despite the limited options and high prices, we encourage you to be prepared, not scared, to be educated. You were here. That's great. All these things that we are recommending, we've already gone over them. So I don't need to read this list. But it is still worth keeping insurance on your home, even if your lender isn't requiring it. We understand. Some households are now having to go bare, but we want to remind you that that insurance is what makes it possible for people to rebuild, that it's not charitable or government aid. FEMA money is needs-based, maximum grants $42K. That's not going to rebuild your home. SBA loans are low interest, but you have to repay them. And charitable aid covers basic needs, not the cost of rebuilding a home. These are the things that matter. If you are to that point where you have a proposal and you have decisions to make, these are the things to pay attention to: replacement coverage over ACV, that code compliance, and then of course knowing what's excluded, which in California is going to be flood, earthquake, and unfortunately in some policies, mold and earth movement. But these are the things that you want to think about. I promised you I would cover this this issue. We have a resource to offer if you are applying to the FAIR plan, and your home is the insured value is over 1.5 or above, or even not. If you you can get a replacement cost estimate on your home from different sources, but one source that you can try is BW Builder. They will give you that estimate for $150. There's a code you can enter, and they will donate $25 of that fee to our organization. They built this service because it's really hard to get a builder to give you an estimate off the top of their head of what it would cost to put your home back, if that's not a project that you're going to be paying them to do. And what we have learned over the years is that the dwelling replacement cost estimating software programs that insurers require their agents to use generally undervalues home replacement costs, because we know, why do we know that? Because 2/3 of our wildfire impacted households find themselves underinsured. This is a long-standing battle. So these are just some of the questions that you can ask about a proposal that you get. And I have a big ask, and it's going to take you just a few minutes. Please, please, please follow this link, uphelp.org/CA home survey, and fill it out. It won't take you more than a few minutes. It adds to our data set. It's very, very helpful for us. We have this survey going. We are keeping tabs. When reporters ask us, I want to talk to somebody who's had this problem or that problem, we use the surveys. If you've given us permission, we will connect you with a reporter, but more importantly, it's giving us information on what's happening to you, what's happening to your premiums, who picked you up. Because here we are trying to give you real-time, real advice that's actionable, not, not wishful thinking. So thank you for filling that out. Phil, have you heard the California Fair Plan is now requiring full payment upfront for their policies?
That is not true. So again, they're happy to announce, I mean, there are additional payment options available. And again, that's something you want to work with your broker and really understand. If you're not paying for your home insurance through an impound account, through your mortgage, you do have the option to make monthly payments now. And really anything above that you really want to modify that, you can work with your broker and really understand. One thing that I do want to clarify, because it's something that conversation we have, I think sometimes people assume that monthly payments means ACH or electric funds transfer, other terminology used for that, but it is a manual process. So again, if you're going to choose to be put on monthly mode, you definitely would want to make sure that you've got reminders to pay your bills. You can just pay online easily too. So you can also access your bill and your statement on our website. So if you go to the California Fair Plan website, you can access your any balance owed. You can see exactly the status of your policy yourself in that respect too. And also your lenders could do that too if they have questions about what your balance might be due at this point. So hopefully that helps.
Thank you. Forrest, is it true some insurance companies are flying drones around and dropping policies if they see the roof in poor condition?
Yeah, I mean, there's aerial imaging that's either by drone or helicopter or airplane, satellite, that a lot of the companies are using now for their data. And, you look at a lot of this information is, I think a big thing that comes up all the time are the trees that are overhanging the property, or if you had a pool or added a pool or removed a trampoline. Those are the things that come up on imagery, that if you know you've removed that risk from your property, make sure you let your agent know so they can send that to underwriting with the correct package, because those questions will come up when they start pulling that data.
Thank you. Insurance companies seem to be using only aerial Google Maps to make determinations. Why isn't each case determined separately? So I think what this person is saying is, why did my neighbor not get dropped and I got dropped? Basically. Dallas, can you, when somebody comes to you and says, it's not fair, why did I get dropped and my neighbor didn't get dropped? What can you tell them?
Yeah, we definitely advise them that every home it has their own every company takes this decision based on the property. And yeah, we definitely have had some clients where the client on this side of the block is getting non-renewed, but the client in front, it's definitely getting a renewal. So it is based on where the property is located more likely, or it's in how we said at the beginning, every property has their own risk score. So yeah, it happens.
Yeah. Our house burned. I'd like to build a fireproof home and then buy a policy that doesn't cover fire. I think California prevents insurance companies from selling such policies. So, I mean, listen, there's some really interesting, innovative, resilient rebuilding strategies people are using, but I think if it's a home insurance policy, it has to cover fire. I mean, Forrest, can you imagine, or Phil, a policy that would insure a home but not for fire?
I haven't come across one. That doesn't mean it doesn't exist. But I'll say, my early part of my career, I spent a lot of times in property claims and large loss property claims. And a lot of these wildfires, there's structures that are metal, concrete, you name it. I've seen them turned into ash. Stuff that traditionally we would think was fireproof, and not so much.
Phil, are there any special considerations relating to a tiny home on wheels? I think you said earlier that that a mobile home can't be insured for replacement value. But is there any other insurance considerations relating to a tiny home? And does
Yeah,
fair? Go ahead.
That's a great question. So first off, so it's on wheels. So that was the first word I caught, or first word running in my head and like a bell. But so if it's not permanently anchored to the foundation, it would not be eligible. So that's one key thing, that it would need to be permanently anchored, like mobile homes are, manufactured homes are. So they have the capability of being put on wheels, but for the time that they're insured, they're permanently anchored. But so if it were permanently anchored, it would be eligible for wildfire hardening discounts if all the criteria were met. But there's not currently a separate discount related to fire retardant materials.
Okay. Okay, here's one for you, Forrest. We built a new home on a burn lot. We're about to move in. And they built the house to code. They have a water tank, but they can't get regular insurance. Is there any insurance company smart enough to see that new homes are not likely to burn and would insure us?
So again, they're going to underwrite this to the individual risk criteria, but the answer is yes. There's options out there, whether it be surplus lines or fair plan, if your admitted markets won't take it. I think the big misconception is when somebody puts a storage tank on the property, that changes your risk score, and typically that does not.
Okay. So somehow we have to lobby the risk scoring systems to be to take that into consideration. Odalis, DIC insurers are now declining coverage to homes with galvanized pipe or cast iron. Is there any geez, I don't know. This is a tough one. They should at least offer a premium adjustment limit. I mean, can you issue a policy? Can you get somebody a policy that has an exclusion? I mean, listen, we know from a whole other set of problems that the insurers are getting very, very tough on water claims, but what would you advise somebody in this situation, Dallas?
Yeah, so if you're getting a declination coverage, there are other type of DIC providers that will offer a limit amount on water coverage. That might be your option. Also, you can get an adjusted or separate deductible for water damage. Now you can look up for a 1% deductible or more, but there's definitely options available for that scenario.
Okay. I know my policy will be canceled when it comes up. Should I wait for the official non-renewal, or should I be proactive and start looking for a solution now?
Well, I'm sorry. It is good to be proactive. However, sometimes we are allowed to quote to provide a new quote at least in 30 days from the non-renewal. And this is because markets is changing a lot. So we just provide a time for, if we have a client who's calling the office today and their non-renewal takes in effect till September, we actually just let them know where we'll be working and providing a quote. However, they should be expecting that quote 30 days before their non-renewal.
Okay. Thank you. Phil, anything to add there?
No, that was said well. Good.
Okay. All right. Sad question, but similar. This wanting to, they're a Firewise community. They've done all these things. They've rebuilt with fire resistant materials, but what can we do to convince State Farm to renew us? I mean, this is a very sad and common question, because I think a lot of people have felt they've been insured with State Farm as long as they can remember, and they just don't, it's hard for them to think about being with another company. So, Forrest, I'm sure you're getting some of those people. What do you have to say about this question?
Yeah, I mean, I can't speak for State Farm, so I don't represent them, but yeah, I would say, first talk to your agent if you're with State Farm and try and provide the documentation to advocate for yourself. And if not, come to somebody like one of us that's an agent or a broker that has access to numerous markets, and we can find a solution. And so it's, I would start with where you're at and then build out from there. But it's a challenge, unfortunately, and every company is operating on their own accord, and they have to look at what their profitability standards are and what they can offer at the time.
Okay, I have a policy with Nationwide, but it excludes peril for fire, so it must not be a home insurance policy. Oh, so that must be a DIC. Would a policy from a non-admitted carrier that covers it all be better than insuring through the FAIR Plan? We've kind of been talking about that all evening. I think everyone's answer is possibly yes. Is that fair summary?
Best suits your needs. Again, I feel, and I have this discussion every day with folks, is just when you're considering these options, you want to put as many alternatives on the table as you possibly can and just weigh out the pros and cons and talk to different professionals and ultimately make the decision for the best policy that fits you or the best combination of policies that fits you and your family's needs the best.
Yeah, I mean, I think it depends on which non-admitted company, right? If it's a really reputable, well-financed non-admitted carrier, that's a good consideration. Is there any financial benefit to become certified as a FireWise community? My broker doesn't seem to think it would make any difference. Well, we've already answered that. The FAIR Plan definitely gives you a discount for that. So I believe USA still does today. This question I got dropped after the fire took my home. Nothing's left other than the land. Doesn't it still have to be insured? So United Policyholders has a good publication on this, updating your home insurance after a loss, staying protected without wasting money. The 3 things you want to consider is you want to have liability protection if you are replacing contents items, living somewhere else while you rebuild. You want to make sure you've got some protection for that. And also continuity of coverage. If you haven't canceled your policy yet, there may be a value in just holding on to it so that you can get non-renewed and not join the ranks of people that are out there looking for a new policy. Is there any relief in sight for senior homeowners on fixed incomes? There was a bill, but it died in the legislature. So I would say, unfortunately, senior homeowners are sort of in the same boat as everybody else right now. That the affordability strategies we've offered are what we can suggest. But this is where you want to be putting pressure on your elected officials. AB 478, Damon Connolly, he was trying to help, couldn't get it moving. If you haven't been getting in touch with your elected officials, you certainly should. They know that the problems are out there. But again, I think they're going to probably tell you the same thing that I've been saying tonight, which is we've got to get the market a little healthier before we can impose new mandates. So I want to say another huge thank you to Phil, Odalis, Forrest, David, Carl, Emily, Amy, and Joel, who have been slamming it tonight. We got a record-breaking number of questions in the Q&A. We had a good amount submitted beforehand. I want to not only thank the panel, but I want to thank the additional people that will be on the next program that we do. And we're going to be, this is how you can get in touch with the folks tonight. But this slide deck will be up on our website. You can take a picture of this now if you want, or you can check the slide deck after we post it. There's more questions in the deck and that you'll be able to see. I'm not going to go through these because we're now over time. And so we're going to wrap up here in a minute. I just want everybody to know there are 5 additional questions that got asked and we got answers from experts. They relate to the brush clearing and tree ordinances, and then materials for non-flammable for the 6 inches, and then some of the again more of the nuts and bolts of doing the work around your home that you need to do, including this one. How do I contact a contractor to do what needs to be done? So with that, we are at the end of our program. I want to wish everybody a pleasant rest of your evening. The recording will be available on our website from tonight's program. My panel has been awesome. Thank you so much. All of you who submitted questions in advance, thank you. It's very hard for us to try to answer all the questions in real time. We did our best behind the scenes. If you did not get your question answered tonight, we will do our best to offer follow-up programming that addresses the questions that you raised. And with that, we're going to bid you all, again, a very healthy and I hope a little bit calmer evening based on all the information that we have provided you this evening. This is not an easy time, but you will get through it. We're all getting through it. And I believe that we will bring some solutions in the months and years ahead. So good night, all.